I've been saying it for several months that the market is likely to explode in summer 2025. Dark pool data points to that, and Tom Lee confirmed it in a video on CNBC today. I'm going to show you all the real data, and we're going to break down everything Tom Lee said and show you guys why this could be the opportunity of a lifetime for 2025 being a very bullish year and is expected to be very bullish. And several stocks could run, as well as some crypto that's going to run a lot. So stick around. Don't skip any part of this video. We're going to listen to what Tom Lee said, but more importantly, I'm going to break it down and show you specific data on what is going on in the market and explain to you why this is likely to happen. Before we get started, don't forget this Friday, June 6th, 6 p.m. Eastern, 3 p.m. Pacific, my masterclass webinar returns. I'll be teaching you exclusive strategies that were only taught to my elite students in Discord previously. I have new lessons and new strategies to teach this Friday. You don't want to miss it. The link's in the information box below. We have very limited spots during these webinars, and a lot of students have missed out on the past. You don't want to miss out, so register now. Link is below. I will have a Q&A to answer your questions, and I'll have a huge announcement at the webinar this Friday. And if you want to learn the strategies that I've been teaching my students in Discord, this is your opportunity to do so. Let's dive into today's video right now. So we're going to look at a lot of data in the market right now. But before we do that, let's take a listen to what Tom Lee had to say. And then we're going to break it all down little by little. And I'm going to explain to you guys why it's fairly accurate and why the market should be poised to do a lot better this year. And certain stocks could do much better than we thought. And there's a few stocks that actually might explode. And overall, the market is likely to make a very nice run, and you're not going to want to miss this.
It is the first trading day of June, second day of June. Our first guest today says the current market looks more like the start of a new bull rather than a late cycle bull, and that could mean some good buying opportunities. Joining now is Tom Lee, Fundstrat Capital CIO and head of research and a CNBC contributor. He's very calm, even in the face of adversity. But this time, the markets have come back to you in a big way. Because at this point, I think they've exceeded your targets they were a couple of months away from where we are right now, and we're already there. So you're raising your targets overall?
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right, we're at 5,900 on the S&P.
That's right. But our full year target was 6,600. So I think that's still a reasonable expectation.
You never changed that.
We haven't changed it.
Never did. Even on April, week of April 2nd or 7th or 2nd, you didn't change it.
No, it felt very shaky because that would have been, a couple 1,000-point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
You think a bull market started April 7th or a new bull market started
yes.
April 7th? In everything because the NASDAQ already, if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull. But at this point, I think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change in positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before then?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. Combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month. And I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up, even if goods prices go up.
You don't?
No, I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
So you're anticipating cuts? Several cuts?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. That's there's a need to actually reduce interest rates.
Do you, Tom, at this point think that interest rates, because it doesn't matter whether we reduce or not, would the long end go up if they reduce the short end because of 37 trillion or this bill that's the big beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
What's Bitcoin? What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But
Yeah.
now I think, what are we, 104 this morning? So it's pulled back.
Yeah, I think it's consolidating. It makes sense. Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But Bitwise has a great stat. 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your 150 target.
Yeah, 150,
150,000.
maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. And if you look at above ground gold, it's probably 23 trillion. So that would be 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So gold. I mean, Bitcoin could be 2 million, 3 million long term. I mean, even higher.
Okay. Thank you. And we're talking years, obviously, but 95% mined. I don't think the last one is mined till 2150 or something.
Yeah.
It's getting harder and harder.
Yeah. I mean, depending on what decimal you want to use, it's probably like, 2040 or something. But yeah, but if you're having something forever, it'll always.
So what's your terminal value?
That's what we just said.
Yeah, I mean,
the final.
He said 2.5 million.
2.5 million at the end.
Yeah.
Or maybe,
Okay, I didn't appreciate
maybe
that.
higher.
Or maybe even
Sorry,
higher.
I didn't appreciate that point.
Yeah, I mean, it could,
But I guess what
1.5
sorry,
to
maybe the way I meant that is,
2.5.
does that happen at the end after it's all
When it's all mined.
when it's all mined,
yeah, and there'll be network fees
or
generated.
does that happen before it's mined?
It's like as if Berkshire did a buyback and there was only one share left. What would Berkshire's share price be? It'd probably be the market value of Berkshire.
And as you said, if I go halfway to the wall and then halfway to the wall and then halfway to the wall, I'll never get to the wall.
Yeah, that's right. You can cut something in half forever.
So Tom Lee basically said that we are looking at running potentially on the SPY to 660. And when we look over at the SPY at 596, for the third time, we are retesting the 595 to $600 range on SPY. Essentially, this right here would be a double top peak, maybe even a triple top. But since this is pretty recent, we can see there's divergence in a downtrend here, which can be seen in the slight downtrend on the line. However, we have a lot of support here. So there's kind of like a divergence somewhere in the next week or so. And interest rates are likely to be cut, more likely than ever. And Tom Lee explained something that I want to break down for you guys. Inflation was like 4% in 2023, and it even peaked higher than that. And it was 3.9 to 4% in 2024. And by the end of the year, it actually got significantly better in the 2.7, 2.9 range, which is where it was near the end of the year in 2024 and the beginning of 2025. Now, when we really look at all of this data and look at where inflation is right now at 2.4%, it's significantly better. The Feds are looking at a target of 2%. And Tom Lee said something very interesting, and that is the housing and the auto insurance has actually been the lagging indicator that's keeping inflation up, which is correct because the housing market has been recovering since COVID. If you don't understand what happened there, many people were not evicted. They were able to stay there, not pay their mortgage, not pay their rent. It was illegal for some time to not get evicted. Like to be evicted would be illegal, I mean to say. And so there was a lot of money lost in the housing market, and it took time to recover. Housing insurance is also expensive, and that's also a lagging indicator. And you have also all the fires in California and all the damage in all of those homes. So the housing market since COVID has taken a beating. Auto insurance is the same, with a lot of damage due to hurricanes and natural disasters in Texas, Louisiana, Florida from the hurricanes over the past 3 to 4 years, specifically in 2023 and 2024. And you combine that with all the issues of COVID and everything in the economy, they've been lagging indicators holding the market down. And when you look at all of that data, like Tom Lee said, those indicators have actually been improving month over month. The housing and the auto is actually getting better, and their inflation is improving month over month. So essentially, inflation overall is going to continue to get better. And like he said, I anticipate inflation to drop to 2% in the next 3 to 6 months based on how things are going right now. And barring any issues with tariffs and Donald Trump and the tariff issues, the economy is getting better. Jobs added is also up. And even though manufacturing PMI data that came out yesterday wasn't as good as we wanted it to be, it's still better than it was several months ago or this time last year. So it's still a year over year improvement. And PMI services data continues to expand. Jobs added continues to go up. Inflation goes down or continues to go down. One of the really big factors to consider here, and it's a very strong indicator for the market, is the bond market. The 30-year bonds are down a little bit, and the 2-year bonds are down, and the yield curve is slightly improved. The bond market has come down from where it was a few weeks ago. VIX has also come down, which we can see right here on my screen. I'll pull it up for you guys. Pull up the VIX. And I'll show you that the VIX is actually continuing to go down in this trend that I drew. I predicted this move on the VIX several weeks ago based on my AVP and based on other data and strategies that I teach exclusively to Discord, which I will be showing you this Friday at the webinar. Link is below to register for that. You don't want to miss it. We can see the VIX has plummeted to 1770. Anything under 18 is really good, and anything under 16 is stellar. So we are below the green line. We were between the green and the yellow, which is kind of a little bit choppy and a little bit uncertainty. Not too bad, but not ideal. And now we're below green and we're ideal. And we have services PMI tomorrow, which is expected to beat 51.6. His previous forecast is 52. If we beat it, then it's what we expected. Things will continue to go well, maybe improve, and we'll likely have a little bit of a run tomorrow. And it could be pretty decent. If we miss this data, I think it will be pretty rough in the morning because we expect this to be good. And if it is good, it's just giving us what we've already priced in. And there could be an additional move and run upwards, but you can see we've expected that. So we would just be getting what we expected. And when you get what you expect, you're happy. And, things go pretty well. But when you don't get what you expect, things are considerably worse. We also have to look at non-farm payrolls and unemployment rate Friday. Forecast is 4.2 on the unemployment rate. This is very critical data. If we beat this and it's better than expected, the market will run very nice on Friday. It'll be a pretty bullish day. If we meet expectation, I still expect some pretty good bullish sentiment. And if we miss, it could be a little choppy. And depending on how much we miss by, it could be very rough. I go over this kind of data in Discord in thorough detail, but unemployment, very, very important to consider, but also jobs added as well. Jobs added is very important because unemployment keeps getting bumped up and down. It's very volatile, but jobs added keeps going up. So if unemployment is going up, but jobs added is also going up, it kind of gives you the notion that people just don't want to go to work. They're not taking these jobs, but there are jobs available because jobs added keeps going up. So ultimately right now, Tom Lee is saying that the SPY is likely to go to 660 by sometime the end of this summer going into the fall, or by the end of the year, it's even more likely. And when we look at the SPY and we look at the overall trend, there's a big supply zone right here. If you guys don't understand what supply and demand zones are, I will be going over that in detail this Friday, so you don't want to miss it. I'll explain my very exclusive strategies on supply and demand like nobody else does. And I'll be explaining that this Friday at the webinar. But this is a supply zone for the SPY. And so when the SPY does actually make its move up, it's going to have to reject on this ceiling or break through. And typically what happens is a stock will come up, it'll come through, come back down, and it's either going to A, come down, come up, retest, and then consolidate below, or it'll come up and it'll bounce and break through, come back down and test, and then come back up. You want to kind of enter and time your entry there if you're planning on running after that. But right now, in this price range right now, it's right at the top of my AVP or right above it. So you'd want to really time this the right way, which would be selling puts in the 590 or even in the 580 range. 580 to 590 puts would be pretty good. they'd be even better going a month out in the 580 to 585 range. But ultimately, you could have a leap option where you could go with the SPY for a year on a leap option, let's say a 560 strike going to March or June of 2026. This would ultimately be a very good play because you can see that this downtrend got broken. It came down, went below, came back up. And just like I said, the same as the supply zone up here, the stock came up, came down, bounced, and kept bouncing. And right here specifically, it bounced on the downtrend, and now it's worked its way up. The SPY, which is also an indicator of the stock market overall, is bullish. We had a break of structure right here. We had a change of character right there. And we've officially broken this structure all the way here. And we're trying to break the structure at 597, which it's rejecting right now. So we have to see how this goes. But I very much see the sentiment and the movements needed to break 600 on the SPY in the coming weeks, and maybe even sooner than that. And 660 by the end of the year is very doable. Me personally, I see more of a 620 range or 640 for SPY, but I see the overall stock market really running this year based on this data. And we have to really look at the core inflation rate, which is going to basically give us the green light or give the Feds the green light to cut interest rates. They're looking for 2%. We're at 2.4%. I believe based on housing and auto insurance getting better, that 2.1% or 2.2% is likely in the coming 30 to 60 days. And by end of summer, 2% is very likely. And if not, nearing the fall and end of year, 2% will be very doable, which means interest rates are almost guaranteed. But we've already been told interest rates are due to be cut in July, and we're going to find out this month at the Fed meeting. So I would be looking forward to that. What I ultimately say is that it's a buying opportunity to find your favorite stocks and enter, because the market, based on what Tom Lee said, is likely to explode this year. And based on my data and my analysis on SPY, sentiment, housing and auto insurance, as well as jobs added, inflation, core inflation, year over year, month over month, we're looking at PMI manufacturing, PMI services data. All of this data does add up to a very strong run. Even dark pool data corroborates all of this. So dark pool data is very, very bullish for May, slightly neutral in June, but mid to end of June, it's picking up, and July is very bullish. So I've got a lot of bullish sentiment in block and sweep orders in dark pool data. So it all points to a pretty big run this year in the SPY and other stocks. I got another video coming out tomorrow that I'm explaining to you guys top 3 stocks that I'd be buying and top 3 stocks that I would avoid and sell as quickly as possible. And that video is coming out tomorrow, so stay tuned for that. I will see all of you guys at the webinar this Friday, June 6th, 6 p.m. Eastern, 3 p.m. Pacific. Links in the information box below. I'll be teaching exclusive strategies, and I'm going to show you guys and unveil the truth behind the stock market. So I will see you there. Very limited spots, huge announcement. I'll be answering your questions. You guys should take a look at these videos and watch them next. And I will see all of you on the next video tomorrow and the webinar this Friday. Take care of yourselves, fam.